Welcome to The Weekly Trend, a podcast for navigating the markets through the lens of technical analysis. The Weekly Trend podcast is provided for educational purposes only and does not constitute any professional advice. Listeners should not act upon the information or content without first seeking advice from a registered financial planner.
Welcome back to the Weekly Trend podcast. Today is Friday, October 25th, 2024. S&P 500 currently sitting at 5839. I'm David Zarling. I'm here with future SEC Chair Ian McMillan. Got some things we can cover this week.
If I was to be SEC Chair, it'd be like me and 4 employees.
Department of Government Efficiency, right?
Yeah, that's probably all Elon would let me have. Say, Ian, here's your budget, $300,000. You can hire 5 people.
Yeah, you'd be like, I want 5, and he'd be like, are you sure you need 5?
Do you need 5 though? Do you think we could put some processes in that can knock that down to 4?
Yeah, and you're gonna be like, how else am I supposed to get ETFs inside of 403Bs?
Yeah, that's weird. I don't know. I never heard that before.
Yeah, it's an interesting. I'm sure there's lots of things like that that we're not aware. Like every day you're in finance and marketing is a day of learning. It really is.
And many times a day of learning how, that's a good PC way to say it, how silly the government and compliance can be.
I mean, we want to have rules to the game. We want a playing field that's efficient. And so people know how to play by the rules, right? It would really be hard to, that's one of the hard things about government regulation and being in finance is many times the deck gets reshuffled or the game gets changed.
And one of my 5 employees will be focused on that.
Yeah.
But they're overseeing all of it. So that's all I got.
That's all you got. No, I love it.
It's all I was budgeting.
I think efficiency is a beautiful thing. And we have a market that is beautifully inefficient, but mostly efficient, which by definition is inefficient. So it's mostly efficient, which means partly inefficient, which is the definition of inefficient.
Yeah, the markets, I would agree. I think it's efficient because the market just does what it does.
It's a future discounting mechanism. It's the most current information we have. I know people like to get wrapped up in earnings, GDP.
And of course, we are in earnings season. We're like 2-3 weeks in earnings season at this point.
Yeah.
Been pretty quiet. The only one I can really think of that people have talked about is Tesla. And maybe that's because I find myself paying less and less attention to earnings. Or maybe, I guess I never paid attention to it. Maybe people just are talking about them. Maybe we're winning the trend following battle. The earnings don't matter.
Right. Earnings don't matter. The price response to earnings matters. And we're not talking about the day of earnings. It's what happens in the days to months following earnings. Does it match the trend? Does it not?
Right. Earnings this week.
Right.
3 1-year highs. Yeah. Back to where we were October 2023.
Wow. So 0% return since October of 2023 for Tesla. Too far, too fast. One year, 0% return.
Too far, too fast. You'd probably short it.
Why do people short up trends?
That's not real advice. Don't go do that.
No, correct.
If you're listening.
Do people short up trends because they're lonely? So that because they can have like their own conversations with themselves or like because they really want that
People short up trends out of ego and thinking that they know better.
Yeah. And maybe they just want that margin call. They want that phone call saying like, hey, you don't have enough money in your account to cover this.
They're so lonely. They just want to talk to someone so bad that they would go into debt so someone would call them.
Yeah.
Hey, that might be beyond rock bottom.
I just don't. Why short up trends? That's all you're going to get is a margin call. Yeah. And I think you're spot on. There's going to be all sorts of, if you have a stock in an uptrend, you're trying to short that, it's somehow you think more, more than the market. So it's, yeah, you're right. It's an ego thing.
And we had a, I don't know, I mean, stocks this week, Dave, kind of all over the place. I mean, Russell's going to be down. NASDAQ's going to be.
Yeah, I was going to say there's a resurgence of the all-stars showing back up on the field here.
Yeah, the whole growth, large cap growth, particularly at the large cap level, when you look at growth versus value.
And what are you using that? Are you using RPG versus RPV, or are you using SPY-G versus SPY-V?
I use the spot. I probably should go back to using RPG, RPV.
Well, I don't think it. I think either way is fine.
But I use SPYG, SPYV.
Yeah. So S&P 500 growth versus S&P 500 value. Go ahead. You were saying.
Yeah, and it's been pretty even throughout mid-ish July. A lot of stuff happened in mid-July. Been pretty back and forth. But big picture says this makes sense because you got an upward sloping 200-day. So it should likely resolve in the same direction as what the trend's been doing. We are getting that. Not looking great for value. I'm going to extrapolate that and say not looking great for Russell 2000 from a outperformance standpoint.
Right. Yeah.
Not saying that Russell can go up. I assume that it would. That's the thing. Also, I can also see it getting stuck in this channel that we were stuck in for a year back in 2021.
Well, yeah. Now that we know that 2021 was all distribution in small caps, the fact that we're up in that area right now, it's not surprising if it takes time to chew through that previous supply. And it's even bigger information if somehow we clear that quickly. If we get through, let's call it 2330 to 2450 on something like small caps or Russell 2000, if we get through that level quickly, that's information. But your point is that's a quality characteristic on an absolute basis. On a relative basis, still no opportunity advantage, small cap versus something like the S&P 500.
Yeah, see, that's it. I mean, just, we like to use the term, trying to carve out a bottom.
Yep.
And, you can watch it. And I still get that. I still kind of get that vibe. But at some point, you got to be out of the bottom.
Right.
If I don't, we can dig and dig and dig. It's not there. And then, of course, right? And is it a surprise that this relationship can get going? If we have a downward sloping 200-day, like, okay, right. I mean, yeah, that's what it's saying. Like, it's saying it should struggle,
right,
to get this turned around.
And here we are looking back 6 months with tech being the underperformer during the prior 6 months. And is this week a clue that the bad boys are about to come back onto the field and take charge of this market? This is what it would look like. Is what this week looks like, where your large cap growth reasserts itself. We'll find out with time, but this is what it would start to look like if that were. It's going to be really hard for the S&P to have any meaningful correction. I'm not going to say it can't happen, right? Because we still have a lot of these large cap growth names that haven't reached new highs yet. But if they do, all it's going to do is carry the S&P with it.
Yeah, it's going to be real. I mean, it's a major tailwind if NASDAQ goes back to outperforming. And you're seeing other things. I mean, right, we see healthcare. We are at in a half year round of lows for healthcare.
Yeah, that looked pretty bad.
So I want to think about that in context. Absolutely abysmal performance in healthcare the last 2 years. I mean, you can say the last 9 years, but for sure the last 2. Yeah. And
sure.
I also wonder if this is going to be right. So where in times of uncertainty, where do people go now? Because it hasn't been right in It hasn't been your staples and utilities. It's been mega cap. We've got an election coming up. Do people say, well, no matter what happens?
Wait, there's an election?
Yeah, well, the people that text me tell me there is, right? No matter who gets elected, we're selling iPhones. People are keeping their Amazon Prime subscriptions. People are, all the people are still logging on to Google, searching things.
Well, and you brought up a really good point this week with the team, which is really, maybe I'm stretching a little bit, for about 6 months heading into this election, which thank you for telling me about it because I didn't know that.
Are you ready?
Oh, yeah.
Okay, well, we got to get you registered.
Yeah. Oh, I'm registered, baby. Don't you worry. No, November 5th, I got something to do.
Yeah. Hey, I'm glad they were both on the non-early voting train.
Yeah. Yeah. I like to be there on election because I like to think that you can get election done in a day. I mean, every other country in the world gets it done in a day.
It's less than a day.
Right. And you just brought up a good point that there hasn't been a sector leader.
No.
Right. We have 11 major sectors. And of course there's one sector that's more than others, but it's not outperforming the S&P as a whole. So you kind of have this natural calm and rotation going into the election. And what you really want to pay attention to at the election or after is what happens then, because you typically see that's the foot dropping, and then you study the sectors because that's the dust settling. The market's going to move, and now it's about doing the deep dive, doing the work, which most people don't like to do, but we look at thousands of charts per week, is identifying where's the money flowing. Because that's really in the end what's happening, right? When you see price move upward is just demand outpacing supply, it's money flow. And what areas are those going to be? And you don't get to mirror your opinions, right? Like, could you see clean energy stocks do really well if a Trump is elected?
If I mirror my opinions, we're going to have a micro wedding.
Yes. It's going to be real quaint.
It's going to be real quaint, 25 to 30 people, maybe like $8,000.
Yeah. Ian, do you take this opinion through sickness and health?
Chin falling. I was marrying chin falling.
Yeah.
And so go back to you take all 11 spider ETF sectors, the big super liquid ones, your XL, whatevers. You couldn't pull up an intermediate term chart and tell me that there is like, oh, this is the market leader right now. Not financials,
Not tech,
not real estate, not utilities, not industrials. Industrials and it's back to a flat 200. Not discretionary, who has made a move the last, there's no short-term and long-term. Yeah. Okay. Like long-term. Yeah. Let's talk about tech. Although, I don't know, it's losing it here over the last few months. There's so we sit here and we say that. To me, that sounds like, and people might scoff at this, to me, that honestly sounds like wildly healthy.
Yes. You're saying that we have this internal rotation happening in the market, which is the lifeblood of markets, that you're just saying that this is a solid foundation, foundation
that happens, and no one is winning the race by 5 strides. It's just, 2 sectors move ahead for a week, and then it is the most what's the word I'm looking for?
There's opportunity costs there, meaning what
were you going to say?
I was just going to say that, you can, because the analysis is, okay, where should the dollar be at? Where should our dollars be invested? And so every dollar you have a decision to make with, and what's the opportunity cost? Well, I could buy the S&P. All right. Now, if I'm not going to buy the S&P, then I should be involved with things that are outpacing the S&P. And your point is nothing is at this point for the past 6 months.
No, but yet look what we've done.
Right. And yes. So, and there's definitely a large versus small dynamic. If you cut the low horizontally, that large caps have begun to resurge themselves or reestablish themselves. And that's, I mean, you're talking about going into the strongest 6-month period, which typically is even stronger post-election. So here we have an election year. November through April is the strongest 6 months. Market can't possibly go higher, right? But yet you look at the internals, and to your point, if we haven't seen a leader, and we know that elections typically bring about a leader, I mean, the stage is set once again for the market to move higher. Now, it doesn't have to. I'm not here to say this is a slam dunk guarantee. It's always a weight of evidence approach, but the weight of evidence continues to stack up that we're about to head into November. The old phrase, buy in October to get yourself sober, is in full effect. We've had an October that's been extremely resilient and positive.
It's been a great October so far.
And in a month that's notoriously weak.
For like the third time, aren't we like 0 for 3 on supposed bearish seasonality this year?
Yes. Yeah.
Right?
I mean,
and we have a really good, Dietrich pointed this out. I know we talk a lot of Ryan's data on here. I feel like more and more every week.
Well, rightfully so. They put
yes, there's probably a reason for that.
Yep.
We've got you look back over the last 70 plus years, we've got the strongest day of the year coming up Monday. It is not a top. Like that typically begets this. I mean, it's a nice 2-week run, and then it kind of begets this whole 6-month period.
And it's kind of crazy. You add in, when you look at like surveys of investment managers and how we're at the lowest bullish reading in that since April, and the bearish reading on that, like when they survey and say, are you bearish or bullish this market, is the highest since mid-September. Is that going back to the old phrase by John Templeton on market evolution, as far as markets growing on skepticism or optimism? Like, that seems like skepticism. People are very skeptical of this market yet.
They are. And hey, I'll tell you this. So another step, we talk about seasonality. It is a great thing to be aware of. We certainly talk about it a lot on here. We talk about it with clients. But what trumps all of that, no pun intended, would be price. And this is going back to 1950. This is up to October 25th, October 24th. This is the strongest election year ever.
So
we've never been up this. We've never had this type of return going into October 25th of an election year.
And that's information. Like, we're allowed to look at that and be like, we've skipped over these other seasonal weak periods. We had these 2 breath thrusts in July of this year and October, November of last year. We have uptrends all over the place, higher highs and higher lows. We have rising 200-day moving averages. We have a NASDAQ 100 trying to go out to new all-time highs today. We'll see if that holds with a couple hours still closed.
We've talked about fixed income every week, that they've told you for months that fixed income's fine. Like I would say there's divergences.
Yeah. And
on charts, momentum divergences, but then we just grinded through all of them.
Right. And momentum divergences are only actionable when price confirms.
Yeah.
And, speaking of fixed income, I know you had the privilege and did a great job going on, Fox Business this week with Charles Payne. What'd you guys talk about?
Hey, we talked about there continues to be for the things that us as technicians on the adaptive team monitor, There just really aren't any cracks. There aren't any cracks out there. And I know that sounds crazy to people. How could we be up? How much are we off the last Halloween? Can you believe we're coming up on a year of the Halloween lows? I mean, we are, 40% off the lows.
Yeah.
And how could it still be going? How could we not be showing any signs of petering out? And I'm telling you, it's not there yet. It's not there yet.
And we'll see it. We'll see it in price when it starts to happen. Like there will be a top.
Have they priced the thing in? I don't know what they're trying to price in. I'll tell you one interesting correlation I saw this week. And I say this with the keyword of interesting. Take it or leave it, but the price and the correlation are right. I think it was early, like maybe Monday, they were showing the poly markets. Poly market's been a big, what's the right word to use here, Dave? Kind of big topic as an insight as to who might win the election. So they took the poly market odds and overlaid them with the 10-year yield. So the market's saying the economy can grow. The economy can grow just fine with 4% on the 10-year, basically. So basically implying that we've got great economic growth. That outlook continues to grow as Trump's chances to win presidency grow.
Yeah.
So you can take that for what it's worth. I don't know if equities are also trying to price that in. There is substantial economic growth on the horizon over the next 12, 18 months. Right. Well, it's been pricing it in for 12, 18 months. So that we're still, right. You would still, if we're hitting all-time highs, you're still looking at another 12 to 18 months. That's the way I see it. So back in October a year ago, still looking out 12, 18 months. We've gone up 40%. We're still looking up 12, 18 months. And the market says it should likely keep going.
Right.
I don't know if it's going to continue at the same rate.
Well, in November through April will be, November through April will be extremely important time because if that's supposed to be the strongest 6-month period and it's also the strongest 6-month period in an election cycle, and it's not, that'll be information too. We have to live both ways. When we buck seasonality, when it's supposed to be weak, that's information. And if we're weak November through April, that'll be information too. And maybe signaling that things aren't as Goldilocks as we originally thought. But I can tell you that price moves first and then the news happens.
Price is moving.
Yeah, and price is moving. And by the time the narrative on this comes out, like let's say we're up another, I'm making this up, 20% in April of 2020, by April 2025. Narrative. What's that?
Let's manifest that.
The narrative that would come out during that, it'd be too late.
Yeah, it'd be like, oh, maybe Trump is good for the economy, or whoever. I shouldn't preface it. That would be the headline. I could definitely see that kind of being like, okay, well, maybe he's not a dictator.
Yeah, maybe he's not Adolf Hitler. It's an interesting thing to keep in mind that narratives follow price. It's not price follows the narrative. It's price moves first, and then the headlines are written. So the headlines don't provide any value in an investment process, but price does. If we continue to highlight, I still remember our first episode in November of 23 talking about the data that was happening at that point in time with the breath rush and the flush that had just happened in October of 23, that the table was set for Mr. Market to come to the party and dine with everybody rather than come and flip the table. And Mr. Market could have shown up and flipped the table and been a poor guest.
Hey, literally November 11th, 2023, episode title table is set.
Yeah. So that's not a statement about, oh, look at how right we were. It's look at how right price was. look at the data price, understand the probabilities, right? Because there's no such thing as guarantee. But what are the probabilities? And we're still sitting in an environment with probabilities pointing to higher prices ahead. Like by very definition, a new all-time high in the NASDAQ 100 means institutions and investors are willing to pay a higher price for something because they view that as value. I don't get to sit here and say, when my neighbor down the street sells his house and someone agrees to buy it, that price is wrong. But people like to have I can't believe that they sold that house for that. That's ridiculous. Maybe, or maybe that's just the market at work. Maybe that's just economic law, the agreement between a buyer and a seller on a price. We see it every day in markets. And if they're willing to pay more, the uptrend continues. People like to overcomplicate this. Yeah. Markets are hard enough. Like, why overcomplicate this?
I mean, here's when I go back and read, November 11th, podcast description. Will the breadth thrust lead to a substantial move?
Yep.
It's been a year and it's been a good year for momentum.
Yes.
Which will not take for granted.
And momentum's the most prevalent factor in markets.
So when that's working, really hard to have a bear market.
And the way to describe that is, we all see those YouTube videos of guys that are sitting on top of a mountain and there's this big boulder and they decide to have some fun and push the boulder down the hill.
Yes, dudes love those videos.
And they just start snapping trees on its way down. That's momentum. The boulder is rolling. Why get in the way? Why fight the trend? Why try to guess where the boulder is going to stop? I don't know where the high is. I don't know. But I'm not willing to step in front of the boulder. I'm not willing to short an uptrending market. That's a recipe for disaster. I'm not willing to stash cash in the mattress when there's opportunity here. And we know that markets move in cycles. There will be a top, there will be a consolidation, there will be a correction at some point. And that will be the time to, there's different market environments. One of them is the time to get return on capital. And the other one is the preservation of capital. Right now we're on the return of capital environment. So why fight the trend? Why mirror your opinions? You have a wife already. Leave your opinions at home. Save them for the officiating on a Thursday night football game. Yeah, you can have opinions about that.
You can have opinions about a missed face mask call in the end zone.
Yes. Missed it. He missed it.
I mean, they did.
Just so happened to be my favorite team, but they missed it.
You got to keep up with. I mean, we say it and we preach it, and I will continue to do it because for some people it clicks. For some people it takes years. Got to protect the purchasing power.
Yep.
Inflation, right? We talk about, and this is going to, I'll just approach this briefly. As technicians, we know that and know and accept that there are still other reasons why people buy stocks. There are billions and trillions of dollars thrown around because people like ratio, like, oh, this is a good price to earnings ratio, or this looks cheap on a price to book, or it is. But we know that, earnings per share, right? Investors are invested in earnings per share when when big things like inflationary periods happen. That means earnings per share go up. That's going to get passed on to the consumer.
Yep.
Earnings per share are going up for a lot of companies out there. So yes, you are paying that at the store, but just also realize that is making companies more money. You can be frustrated about it. Then don't go home and say, well, gosh, how these companies how do they just keep on making so much money and their stock keeps going up? Because they're passing it on to you.
Right.
How do you offset that? You might as well try to participate in some of it.
Well, that's exactly right. if meat is going to jump in price,
Yeah.
that means any dollar put in the mattress becomes worth less.
Yeah.
Whereas if you buy stocks or equities or whatever the instrument is that keeps pace with the price of hamburger, then you've protected your purchasing power. And so let's use price to determine timing, not some opinion about hamburger costs, which are real. I'm not saying that they didn't happen. I'm not here sitting, they missed a face mask call. It happened. But my opinion on the face mask call has no negative financial impact on my family. But the minute I start having an opinion that I think is smarter than the market, I immediately put my family at peril financially. Why not participate in a trend than try to fight it? Don't fight trends. That's the simplest phrase I can deliver today. Is why
You
fight
said it
trends?
earlier. It'll eventually end.
It will.
Suck. It'll be painful. It'll be worth riding it out to the end. Riding it out through till the trend changes.
Right. We don't have to participate in downtrends, but we should be participating in uptrends. When we're in uptrends, we're buy and hold investors. When we're in downtrends, we're not. It's okay. We don't have to know all the information all the time, because all the information all the time is actually reflected in price. You bring up someone being involved in something because of earnings per share. Someone might be involved in something because they love the product. Someone might be just blindly buying an S&P 500 fund that happens to buy that stock because it's a 401k contribution that's going in. Someone might be selling something because they don't like the dividend. They also might be selling something because they got to put a kid through college. All opinions are reflected in price. Everything is in there. So why not study that rather than one opinion in a vacuum? Why not study all the opinions of all market participants that's reflected in price? That seems like a more quality process and system than your sole opinion about one sole data point. Why not take all the data points, all the opinions, pile them up and put them, which they are, piled in price, and study that instead?
Or, they'll talk about, the CCO just sold $3 million worth of stock. Okay, what about the hedge fund that just bought $10 million?
Right.
Because I can play that game. And yeah, it's all not no one cares unless you're going to go interview everyone that made a transaction on that stock. And I guess if you did that and 90% of them said, yeah, I don't like it. Okay, maybe you got something, but you're not going to do that. No one's going to do that. So we take what we get. We get closing prices every day, and we use that information to should I buy this? Should I own it? Should I just hold it? Should I sell it? Should I buy more?
That's, in the end, isn't that what a price is? It's a weighing machine. It's a voting machine. Like you're taking the opinions of everybody and measuring it. So you don't have to go out and take the survey because it's already reflected. Price is the survey.
And all the volume, it's just free markets. It's like someone's opinion with $10 million matters more than someone's opinion with $500.
Yep.
Just us.
Yep.
And that will be reflected.
Exactly. And you brought up momentum before, and this is where I want to highlight the supporter of this podcast, the Adaptive Select ETF, listed on the NYSE under ticker ADPV, which helps investors access two of the most prevalent factors in markets, one of them momentum, and the other relative strength. Using proprietary identification methods, the Adaptive Select ETF attempts to own the strongest 25 large cap stocks when the market is in an uptrend. And since not all market environments are the same, Adaptive Select seeks to prevent extended declines by moving to short-term treasury bills and cash during long-term market downtrends. Investors can find out more, including how to invest in ADPV, by visiting adpvetf.com or calling 1-833-880-5200. Investing involves risk, including possible loss of principal. Distributed by Quasar Distributors, LLC. So you did a great job on Fox Business with Charles. We've highlighted quite a bit of time to price and equities. You mentioned bonds, fixed income. What other areas do you want to pivot us to that our listeners would find valuable?
I had the S&P workbook yesterday, kind of the same sentiments of it's just you can find a smattering of sub-industries from electric utilities to home builders to industrial machine. There's just, it goes with, you can go fund, like, you don't have to go do the work for sure, but there are things, we talked about healthcare. As bad as healthcare is, you've got what did we talk about? Like medical equipment yesterday?
Yeah, medical devices. Yeah.
Yeah, medical devices. Insurance getting hit today. But you got some. And then you got things like, not to get too old school, we've got Oracle, all-time relative highs. Yes, above the 22,000 highs.
A 24-year base?
And that's an amazing relative chart.
No one talks about Oracle anymore.
IBM trying to make a move.
IBM and
was
Oracle.
IBM, right?
Yeah, IBM and Oracle, man. Those are some oldies.
There are, and then of course you've got, to your point earlier, you've got Apple all-time highs this week. Like, what are you going to, how are you going to bet against the market when, how much of the S&P is Apple now? I don't know off the top of my head.
Well, I know that, NVIDIA also working on new all-time highs, and that had been encroaching on Apple's space as the largest component. But to your point, when you look at the S&P 500, Apple represents, it's the largest piece. It's 7% of the entire index. You're talking about 500 stocks. So you take 100 divided by 500, doesn't equal 7%. So Apple is larger than, many components of the S&P 500. And if that's going up to the all-time highs,
it's probably large. It's probably larger than like the smallest 300 components or some wild stat like that.
Right. So are you really going to fight new all-time highs in Apple and NVIDIA, which represent 14% of the index? That's really hard. That's a hard life. Why get in an argument with Mike Tyson? Not worth it.
Me, the S&P is Mike Tyson. I just give him my money.
Right. Make Mike Tyson work for you.
Yeah.
So what about Bitcoin? What about crypto? We haven't spent too much time on that, and for good reason, right? We've had Bitcoin moving sideways for months.
It continues to try and here, been, a couple weeks in this 66 to 70, okay, we'll call it 69,000 range, above a 200 day. We look at something like MicroStrategy, which I think most would agree, a Bitcoin proxy. In layman's terms, it's just a company that buys Bitcoin. That's the way I view them, at least.
Yeah, no, I agree.
Just pick up, like how many I'm sure they probably have some type of revenue. Other than like they hope that the value of Bitcoin goes up. But that keeps on going higher. Golly, if Bitcoin gets out of this to the upside, been consolidating since March. Holy cow. We're talking a pretty big potential move on deck.
Well, and that the base using the depths of 2022, that base, a measured move would be about 280% in Bitcoin. If you were to clear 70,000, that's how you can measure risk reward. If it's back below 70,000, fine, don't be involved. But above 70,000, the targeted move is, we're talking about 280%, which people, you say a number like that and people's eyes roll because, well, that seems ridiculous. Well, was it ridiculous in prior years when it made those type of moves? Was it ridiculous when from the COVID lows, coin moved 300 or 1,300%?
No, it's not ridiculous when it makes sense to me and it happened under my candidates.
Yeah,
And and if I was participating, then right. Yeah, definitely. But like if I was sitting on the sidelines, no, it was a stupid move.
True story. Human biases.
Biases are real.
Biases are real. They keep us alive, yet they hurt us, right? You touch a stove and it's hot. The bias tells you not to touch the stove again. The beauty about price is it can tell you when to touch the stove. When is it hot? When is it not? And that's the price overcomes our biases. It checks our biases and allows our biases to work when it's appropriate to work. Biases aren't bad. It's just when they become overwhelming and make us make irrational decisions when the data is saying elsewise. If the stovetop is cold or cool or not hot, it's okay to touch. We have uptrends. It's okay to touch the market. It's okay to be involved with
bias. Like that's a bias too.
Right. So don't fight trends. Don't do it. They had these programs when you're in grade schools, just say no to drugs. Just say no to shorting uptrends. Just say no to
financial media.
Right.
Team televised financial media. I'm not saying, people might consider us financial media, but we don't talk about the headlines, talk about the news. Feel like we're a little bit more realistic.
Yeah, because we're focused on price. We're not focused on creating narratives that are entertaining. I get it. You could listen to this podcast and be like, dude, these guys don't give me the gravy. They don't give me like all the down and dirty on why Latin American stocks are going out to fresh all-time lows while Argentina is going out to fresh all-time highs.
I don't have any economic policy. I know they really like the guy they elected down there. And here you go. Argentina was going up well before that.
Correct. Argentina moved many percentage points higher before their election. And what's interesting is Argentinian stocks using ARGT is heavily tilted towards financials. So why don't we pay attention to, is there something going on in financials that we should be paying attention to? And you have JP Morgan going out, just continue to make new highs in an uptrend. Berkshire Hathaway, I'm not saying either of those companies are domiciled in Argentina. My point is that financial stocks across the globe continue to participate to the upside. What's that?
Well, and I'd say don't be the person that you get to 65 and your wife's ready to do what you've dreamed about. And you say, well, we're not there because, I don't know, Joe Biden got elected and I just got nervous about the economy. Or so-and-so got. So we missed out on an 80% 3-year rally in stocks. Don't be that person. I know it is so hard to, you could do it. You could log in. Pull up a chart once a week. Are you above the 200? Pick whatever you want to pick as a trend. You don't have to pick a 200-day moving average. Come up with some 1 or 2 really simple rules and
participate in the trend.
And other than that, go play golf or go
right
to go hop on the boat, go on vacation.
That's a great analogy. Why get in a boat and try to paddle upstream? Not very fun.
Go on vacation. I know a guy. And he literally does, it's weekly and monthly charts, and he literally logs in maybe twice a month to kind of see where his stuff is at. A retired guy in Texas, and that's the way he follows trends. And then he just goes on about his life.
Right.
And he's kept up. He's built wealth off of that. He has kept up in the market. He has avoided downtrends, and he spends about 2 hours a month on it. Because he owns 4 or 5 things, and all he needs to really look at is a weekly, monthly chart.
Yeah. The daily price moves in a microscope, if you're just looking at daily price moves, not going to give you information. It's the trend over time. It's the accumulation of price over many periods. That's why, you mentioned any time frame, we use 200 days. If that's rising, demand has been outpacing supply for 200 days. The river continues to flow that direction. So don't be that guy. Don't be the one that fights the trend. Anything else, Ian, as we bump up against the end of our time? I always appreciate doing these with you. It was great to have you in the office last week. We had a great education event with our clients. Anything else you want to highlight before we sign off?
I don't have anything.
So the main message is don't fight trends. Don't be that guy. Yes, an election's coming up. Participate in that election how you see fit. I know I will be.
Yeah.
But I'm not going to let...
Whatever, go out and vote. Don't care who you vote for. If you want to vote early, yeah, do it. Just vote. It is super important part of being an American citizen.
Yep.
And remember, if you don't vote,
you don't get to complain.
You don't get to complain for 4 years.
Participate in the process. Participate in trends and participate in the process.
Yeah.
It's a good way to end it. If you like listening to this, please give us a high ranking. Share it with your friends. That helps us get the word out. We appreciate it. Otherwise, Ian, always great to have you on here.
Have a great weekend, everyone.